Are you an established small business owner or aspiring entrepreneur? Would you like professional advice to help your business grow and succeed? Well, look no further. The Virgin Islands Small Business Development Center is the territory's #1 resource to move your business forward. Enjoy no-cost advising, low-cost training, and technical assistance from experts in both the public and private sectors. The VISBDC is nationally accredited and sustained by the University of the Virgin Islands and the U.S. Small Business Administration. Visit us at our locations on St. Thomas, St. John, or St. Croix, and follow us on social media at VISBDC. For easy access to all our training and networking events, be sure to join our newsletter and download the VISBDC app. The Virgin Islands Small Business Development Center, here to help your business start, grow, and succeed.
Good morning, everyone, and welcome to the VISBDC's hosting of SBA Webinar Tuesday, How to Apply and Qualify for an SBA Loan. Today's session will equip participants on how to prepare a strong application package to secure financing for their business. Today's discussion will be led with the SBA Guarantee Program and also focus on the 5 C's of lending. Our lead presenter is SBA Senior Area Manager for the USVI, Wayne Huddleston. Here's a friendly reminder to put your questions in the chat, and they will be addressed either by the presenting team directly in the chat or later during a question and answer segment. A copy of today's presentation will be attached to the post survey email. We encourage you to take a few minutes after to fill out that survey that lets us know how we're doing. So without further ado, Wayne, the floor is yours.
Thank you for that introduction, Shrika. I appreciate it. As Shrika said, everyone, my name is Wayne Huddleston. I'm the Senior Area Manager for SBA here in the Virgin Islands. We do regular presentations in cooperation with the Small Business Development Center on a variety of topics to SBA. So this one today is about lending, but hopefully you will take a look at the other training calendar as well. The rest of the programs that are out there, we offer a lot of great things. About every 2 weeks, we're doing a presentation. So today, we're going to be doing a presentation on how to secure an SBA loan for your business. We're going to talk about these things. We're going to talk about sources of capital, the various sources in addition to lending that you can take advantage of to secure capital for your business. And we're going to spend a lot of our time today talking about what is called the 5 C's of credit. This is very important, and this is a framework that all lenders use when they are arriving at credit decisions. Very important to know that when securing any type of loan, whether that's an SBA loan or any other type of loan for your business. We're going to talk about what government guaranteed lending is, specifically with SBA, and how that can help you secure a loan. We'll then transition to how to find a lender and what you will need before you walk into a meeting with a lender. And then we're going to go over technical assistance available. And then finally, at the end, we will have plenty of time for Q&A. So please feel free to ask questions at the end. Don't leave here with anything unanswered that you may be thinking about, or a question or concern you have about securing a loan.
Wayne, sorry to interrupt, but can you move your Zoom taskbar? We can't see the title of the slides.
Oh, I don't even know how to do that. Let's see. What about now? Did it shrink where you can see it?
Yes.
Okay. I think I just need to click a message there. Okay. All right. Before we get started, I'm going to show just a short video that does a really good job explaining the different sources of capital, especially for startups, but also this is applicable to anybody who is seeking funding for their business. I believe you need to escape out of this, and I'm just going to go to here, and it'll take about 3 minutes.
They get money from their own savings. Most young companies need money, which may or may not come as a big surprise, but they do. The number one source they get money from is from their own savings. Whether it's a few $100s or even thousands of dollars, that's what we tend to tap first. And a lot of companies don't get money from any other place. They get money from their own savings, and then after that, they're lucky enough to be cash flow positive. They're profitable. So we talk a lot as if all companies require all sorts of external capital, and the reality is that more than half of young companies get all their funding from a combination of founder savings and then cash flow from the business, and we're out of here. Next up on the list is another one that catches, I think, people by surprise, and that's credit cards. Almost every young company you can think of, to one degree or another, was funded on credit cards. And it is the single largest source of capital for young companies after founder savings. And then the next place where they tend to get money is from friends and family. After I've tapped out my credit card and I've used up all my savings, I turn to people I know and say, hey, will you help me? And that's the third biggest source of capital. And then the next place is banks. And the banks are a totally weird situation because with banks, they get a lot of attention, but they actually fund very, very few young companies. But it's not their fault. You have to think about the way bank lending works and how shareholders want banks to lend. They want them to lend money against secured assets. And young companies don't have any secured. They have nothing to secure it against. And the joke in the industry is you can get all the bank funding you want as a startup as long as you don't need it. And then the last piece is venture capitalists. They get the lion's share of the attention, which in some ways is warranted. You know, your Googles and Apples and FedExes and many others all have venture capital money inside of them. But the reality is, and this is from Kaufman Research, less than 20% of the fastest growing companies in the United States took any venture money. And that's not because the VCs wouldn't give it to them. It's because they didn't want it or didn't need it, because they had all those other sources. I don't need money, and I certainly don't need money on these terms. Because, you know, venture capitalists, unlike banks, they don't lend against secured assets. They give you money in exchange for shares. So they take some of your company away. So my answer is if you don't need it, definitely don't get it. There's no question the venture industry has become staid. The irony is it's intended to fund disruption, and yet it's an industry that had become complacent. And interestingly, over the last 5 or 6 years, we've seen the emergence of other mechanisms for funding, like AngelList, like these kinds of peer-to-peer funding sources, as people increasingly provide capital in smaller amounts, but more people doing it directly. Having said all of that, though, venture capitalists are hugely important for those young companies that don't have access to bank money, but are growth companies. They have the prospect of being a $5 million or a $10 million company in a couple of years, and they need that growth capital to get there quickly. So it's a race. And the way you play the race is by getting money from people like venture capitalists who give you the money so you can compete with other people who are racing as fast as you are. If you can run a company off cash flow and some combination of credit card, your own savings, and friends and family, you know, Bob's your uncle. Run. You know, keep all the equity because, you know, there's no better thing than being in full control of your own destiny.
All right. That was just a short kind of intro to.
It's incredibly aggressive, the timeline to manufacture the first phase of this site and then start production mid-2026. How big a factor was that timeline in Ohio's selection, Palmer?
There we go. Okay. Sorry about that. Okay. I wanted to show that short presentation at the beginning because it gives a really good and brief overview of the sources of capital businesses use to start and grow. One of the best things it said at the end was if you could keep control of your company without getting a loan and getting an investor to take equity in your business, that'd be great. So anything you can do. There are many sources of capital in addition to a loan. There are personal funds, personal savings, personal credit, and those are largely the vast majority of businesses get their start in personal funds and savings, and many of them still continue to grow using personal savings or credit or leveraging the income of the business as it grows to sort of just kind of keep things going efficiently as they grow and growing smart and not getting ahead of their skis in some ways. There are also other ways, though. Personal friends and family. There's traditional debt through a bank, which we're going to focus on today, and an SBA guaranteed loan, which we'll focus on. Then there are other things that were talked about in the video, such as crowdfunding, angel investors, and venture capital as well. I want to show all those in the beginning because I want to convey that lending is not the only way to grow your business. And it is not necessarily even the first thing you should think of when you want to start and grow your business. There are lots of other ways. Research has shown, and now this is specifically for startups. I'm not sure if we have how many startups we have in this presentation, but if you are a startup, it is helpful to know that, as you can see in this graph here, that approximately 1-2% of startups get their funding from a bank. The vast majority is through personal savings and credit and through friends and family. Sometimes you might be able to find an investor. That is also very rare. But bank financing is typically not the place for startups to get their funding in the very beginning. Now, as a startup grows and they have several years under their belt and they have shown that they are viable, that part of funding grows and bank financing becomes a more and more frequent used source for income. But at the beginning, it is definitely not. We are specifically going to focus on lending today and make sure that you are knowledgeable and prepared before you walk into any lender, and hopefully will increase your chances of getting a yes on a loan should you need that. A couple of things up front to know, though, is 100% financing is not really a realistic option for any business. Lenders are not interested in taking 100% of the risk, either whether you're a startup or whether you've even been in business for many years. They want to ensure that they have spread out that risk as much as possible and that you have some skin in the game as well. So if you need, let's say, $100,000 to start your business, do not expect to get that full amount from a bank. You're going to need to find some other sources of capital as well to go with that. There are no grants available for general purposes, not to start or grow a business. So even at SBA, we do not provide any grants to start a business. Your personal credit history is very important. We're going to talk about that later on in the presentation. Lenders are most likely going to require one or more personal guarantees, either from you as an owner or perhaps some partners as well. And at SBA, we do not make direct business loans. I'm going to talk about that in more detail later on, but I just want to make sure we know that up front. So as I said in the beginning, what I'd like to focus on for the majority of this presentation is something called the 5 C's of commercial credit. These are a general framework that all lending institutions use to evaluate your loan application. However, each institution will vary on what is acceptable for each attribute. So they're all going to look at these different attributes, but each lender sometimes has a different comfort level with certain industries, or they require different amounts of collateral in a loan or a different credit score. They're all going to be different in how they view it. But they're all going to look at every single one of these 5 C's, and it's very important that you're knowledgeable of those and understand your position relative to them before you walk into a lender so that you can speak their language. So the first one I'm going to talk about is capacity, and that is simply your ability to repay your debt. The vast majority of lenders are not comfortable, and some are just not willing at all, to provide a loan to a startup. They want to see that a business has been able to generate sufficient cash flow to repay the loan. These are not grants. They're not investing in your business. These are things that must be repaid in full. And to do their job effectively, they need to make sure that the likelihood of being repaid is very high. They're going to be looking at your financial statements to see, do you generate enough profit, and not just enough profit to get by and pay the loan, but to also pay yourself, to have some cushion, and to make sure that business can withstand shocks to the system that may happen and still be able to pay that loan. How long your business has been operating is a key indicator for them. Research has shown that many businesses after year 3, 75-80% of new startups don't make it. So they want to see at least some businesses that typically have been in existence for 3 years or more to give them a little bit of assurance that this business is something that is viable and can repay its debt. They're also going to look at your credit score. some people say that credit score is also evaluated in another part of 5Cs, but I put it here. I think this is all about your ability to repay. Your credit score is what is needed is going to vary by lender to lender and by situation by situation. A lot of people will ask, what is the credit score I need to get a yes on a loan? And that's hard to answer because there are many other factors in addition to your credit score that go into a loan decision. However, you generally must be above 650 just to have a realistic shot to continue the conversation. If your credit score is below 650, I wouldn't walk into a lender to request a loan. I would first dedicate your efforts and time into raising that credit score. Ideally, if it's above 700 and above 750, then typically when it gets above 750, credit score is not a concern to a lender. They document it. They still look at it. It's important, but it's typically no longer a concern for them. But when you get down into the 600s and certainly below 650, it's just not doable. Second one is capital, and this is the amount of money that you are putting in to the need for capital in your business. So this provides a cushion for you not only to have savings on the side if there's a period where cash flow is tight, but it's also a measure of your skin in the game. Lenders are not willing to assume 100% of the final financial risk for your venture on their own. So they want to see that you have some savings and put something into the deal. So typically they're looking at least 20%. So if you need $100,000 to make it to the next level, they're going to want to see that you have put in at least 20% of your own. So $20,000 in savings or something on the side to show that, okay, they can provide you a loan and you have some cushion and you're involved in this as well. You're not expecting just the lender to put up all of it. The next C, the third C, is collateral. And these are assets that can be pledged as security in the loan. So think of it just like in a personal loan, when you get a car, when you buy a house is mortgaged. The bank that is providing you that mortgage has the right to repossess that house if you just stop paying. Same with a car. You stop paying on your car, they have the right to repossess your car. With a loan for a business, they will need some sort of assets that can be pledged as security. It's relatively easy if you are buying real estate and things that they can easily secure and sell if they need. It's a little bit more difficult for inventory. Lenders are not interested in being in your business. They want an asset to serve as collateral that is easy for them to turn around and repossess. Here in the Virgin Islands, collateral is an important piece. They often will need a higher level of collateral than in other markets because it is a little bit harder sometimes to secure those through the court system. So just because I have seen situations where borrowers are seeking a loan and they can provide 100% collateral. And by that, I mean they provide collateral that covers 100% of the loan. And so normally you would think that's a no-brainer. If they have an asset that serves as collateral that covers 100% of the loan value, it should make up for any other deficiencies in the loan. You should be able to do that loan. But in the Virgin Islands, it does take through the court system. They do still incur fees and expense and time just securing that collateral and selling it if they need to. And none of them want to go through that process anyway. So it's important, but it can't alone overcome any other deficiencies in the loan. They will also discount the current value of collateral to a realistic liquidation value. So as I mentioned, it's going to take them time and effort. So they're going to discount that when they assess your collateral. But it's an important piece and it's got to be a part of your loan application. The third C I want to talk about is conditions. And these are the conditions in the local economy, in your specific industry, and the environment that you're working in. They want to see that you are in a favorable operating environment that is going to increase their chance of repayment. It's assessed in a couple different ways. One is through your business plan. They want to see that you have done a thorough analysis of your competitive landscape. If you're the type of business that relies on suppliers, that you understand your supply chain and your customer relationships. They also want to make sure that you understand and have assessed the overall economic conditions that you are operating in. For instance, if you are a tourism-based business, they want to see that you have plans in place for when it's not tourist season, that you can still remain viable as a business, or if something happens that would temporarily impact the tourism industry, how are you going to overcome that? Who are your competitors? All sorts of things. They're going to have a general sense of the local economic conditions and the local industries, but they want to see also that you have done a deep dive and thoroughly understand those in your business plan and that your projections make a lot of sense. So they're certainly going to make sure that you understand the risks and you're prepared to mitigate them in your plan. And then the final C is character. And I say this to the end, it is a little different than the other 5 C's, in that the other 5 C's can typically be addressed and improved through documentation and effort. So for instance, you can always improve your credit score. You may not be in the right place now, but you can do the things to make that score go up. You can put together a good financial statements that show you, here are my balance sheets, here's my cash flow statements, here's those, and you can put those together to satisfy that C. You can secure the collateral, you can put together a good business plan. Character is a little bit different, and there's a little bit of a gut feeling in this with lenders. It's generally the overall opinion of a borrower's general trustworthiness, credibility, competency, and integrity. It matters a lot to a lender because they need to feel confident that the business owner is responsible and will stand by the obligations in times of crisis. It's assessed in every interaction that you have with a lender. So for instance, if you have made an appointment with a lender, you should show up. And if you can't make it on time or you're late, you should notify them. Or if you have to reschedule, let them know. If you have promised to provide some financial statements or other documents, you should provide those. Just do what you say you're going to do. They will also look at your references in the community. As you know, in the Virgin Islands, we're a pretty small community. So they are going to, if they don't already know about you, they're going to ask around about you. Your reputation is important. But it's overall a gut feeling. We have a little time this morning, so I'm going to give 2 examples on character and how it can impact a loan in big ways. So years ago, I used to be director of a small business development center in Texas, and we would have small business owners come in all the time seeking capital. And in 1 week, we had 2 business owners that came in where the outcome went in directions I did not anticipate, and it all came down to character. The first business owner came in early in the week, and it was someone who had an interest in opening a sewing machine retail business. And just intuitively, right in the beginning, I didn't think that that made a lot of sense. I didn't understand why people would need to have a retail store to buy sewing machines. He did not look like someone who sold sewing machines. I didn't understand why he needed a space for it. He also told me that he had a bankruptcy that he was recently coming out of. And so I thought to myself, this is going to be very difficult to get a loan for this person. Nevertheless, I had him meet with one of our business advisors, and they began the process of doing a deeper dive into his needs to see if there was anything that could be done to help him out with a lender. The very next day, I received a referral from our local business incubator that had a healthcare device manufacturing company that was already up and running. They had patented several devices in the healthcare industry that were incredible to help with physical therapy and communication with doctors. The lenders typically love the healthcare industry because they are high return industries. So this business had already actually been operating for a while. They had secured significant contracts, and they needed a multi-million-dollar loan to rebuild or build out a facility to ramp up production. And things were looking fantastic. So again, connected them with one of our business advisors and began connecting them with lenders. Fast forward a month or so, and I received a call from the first lender that the first business was referred to. And he called to tell me, thank you for the referral. And he was actually interested in providing this prospective borrower with a line of credit of $100,000, which is what he needed to start his business. I was surprised to hear that, but he told me there were some things in the deal, such as he had an exclusive arrangement set up with Singer, which was a big producer of sewing machines. And when it came to character, he said it really came down to, I just trust a guy. He was always honest with me. He was brutally honest with me. He always did everything he said he would do. He explained his bankruptcy in a way that made sense. He had done some thoughtful work to put in some places to mitigate against that happening again in the future. We realized it was kind of a one-off, unusual circumstance. And I just trust the guy, even though he doesn't have the financial statements years to show. I think he's going to be successful. And so we're taking a chance. We're going to give him a $100,000 line of credit, which was fantastic. I did not see that happening, but that business owner was able to get started and go. Then a few days later, I received a call from another lender who was working with the medical device firm. And he said, unfortunately, we're not going to be able to get there. And he was very disappointed. And I asked him what happened. He said that they were going through the process. Financial statements are great. Collateral is great. All the 5 C's were actually, he was knocking them out of the park. They had great credit, all sorts of things. In the process, though, they asked a lot of questions. And this owner of the business had a partner. And they asked them both many questions about their background. And one was, have you ever been convicted for driving while intoxicated? And this person's partner had a ticket for that many years earlier. I think it was like 10 or 15 years earlier. So he didn't want that to jeopardize his chances of a loan. And so he put, no, that's not in there. And of course, the lenders do, when they're talking about a multi-million-dollar transaction, they do a very thorough vetting of the borrowers. And that came up. And it was sad for this lender because he told me, he said, we really don't care at all whether they had a ticket for that. We just asked those questions just to see if they're going to be honest. And this person was not honest. And when it comes to a multi-million-dollar deal, if there's any indication that the borrower is not honest and lacks integrity, we are not going to do the loan. And so they didn't do the loan. And that set that business back significantly. They had lined up some contracts, and then they couldn't perform on those contracts. They had to restructure their business. I think the majority owner bought out the other owner who had helped sink their deal. That caused a big problem. But I bring those 2 examples to light because it shows the importance of this C, which is character. It's an important one to establish your credibility early on in the process, and it can even help overcome some other deficiencies you may have in some other C's. So putting it all together with those 5 C's, if your business is lacking in one of those C's, it doesn't mean the loan will be denied. But that is where a lender will look typically for additional support in an effort to get to a yes on the loan. And that additional support is typically in the form of additional guarantors, such as other individuals or maybe another business or something that can serve as a guarantor on that loan. And very frequently, they will use a government guarantee to act as that guarantor. And they will, typically in the Virgin Islands, it's going to be either through an SBA guarantee or through a USDA guarantee. And I'll talk about how that guarantee process works. Also, if you're deficient in one of C's, a lender will typically refer you to a resource partner, such as the Small Business Development Center or SCORE, where you can sit down with a counselor one-on-one to talk through the things that may be obstacles to you getting a loan and can help you improve those and help you get turned back to a lender to retry if they can't get there. However, if a business is lacking in multiple C's, it is usually not realistic to expect an approval on a loan or even a credit approval until you improve those areas. What I frequently recommend to anyone, well, I recommend this to anyone who's seeking a loan for a business, is before you walk in the door to talk to a lender, you should just take out a sheet of paper, write 5 C's on them down the left side, and then write out where are you on those 5 C's. So if it is for conditions, you would write out, do you have your marketplace? Have you fully explained those conditions? Can you explain those verbally to someone quickly in a way that makes sense? Do you know your credit score? You should know your credit score and write it down in there. You should know, do you have your financial statements together? Do you have an idea of what will be pledged as collateral? Have you put that together yet? All those should be answered. You shouldn't be thinking those through in front of a lender. You should have those identified in advance. As I mentioned, the SBA Loan Guarantee Program does help. We typically are leveraged by a lender when one of those C's is problematic for them or there's some deficiency in there. They can leverage that loan guarantee from us to help further reduce their risk, enabling them to provide a loan or credit under the terms that are favorable to you. And in some cases, enabling them to provide a loan when they otherwise wouldn't be able to. At SBA, we are leveraging the good credit rating of the federal government to back a loan for a lender. We're not providing, as I mentioned before, we're not providing the loan directly. Your typical SBA loan is through a guarantee. We can provide a guarantee anywhere from 50 to 90%, depending on the type of the loan that we're talking about. Lenders will then leverage that guarantee to assess the loan and then make a decision from there. All of the 5 largest lenders in the Virgin Islands, Popular, First Bank, Oriental, Merchants Bank, and Bank of St. Croix, they are all authorized SBA lenders. They have all done SBA loans in the territory in the past. I strongly recommend, if you are at the point where you're ready to talk to a lender to secure a loan, you should start with the lender with whom you already have an existing relationship. So if it is one of these local banks, you should start there. I recommend even that you start before you need the loan. I recommend every small business owner, before they need a loan at all, to make sure they know who their commercial credit officer is at their particular bank. You can make an appointment. You can talk about what you're doing, what you think you would like to do in the future. Lenders love that because, one, it gives them an opportunity to perhaps provide you some additional services that you may not be thinking about, whether that's some cash management services or a different account. But then it really helps you when down the road you need to ask for a loan or a line of credit or something. That lender and a person at the bank already knows you've come in early, they have an existing relationship. It helps them get to a yes faster. So really important. If you either do not already have an existing relationship with a local lender in the Virgin Islands or would like to broaden your scope of lenders that you're reaching out to, we have a tool on our site called SBA Lender Match. In fact, I highly recommend when it comes time to actually start requesting that loan, start with your local lender and work with them to get the loan done. But at the same time, I still highly recommend that you put out that opportunity to other lenders. And SBA Lender Match is an excellent way to do that. At the end of this presentation, well, actually, I can click on it right now. I'm going to go to the website right now to just show you quickly how SBA Lender Match works. See if this works. Okay, so you can see on the site, you go to SBA Lender Match, make sure the URL begins with sba.gov as it does up here. This provides just a very short overview of what it does. Essentially, what it does is we are just asking about a dozen qualifying questions that lenders have identified to us as important questions to know up front to help them determine if this is a qualified prospect for them. These questions are going to be very simple, such as, what is your business? How long have you been in business? How much do you need? How much do you make? What's your revenue? Those types of things. Once you answer all these questions and hit submit, that immediately goes out to every lender in our database who has said, I'm interested in looking at deals if you're from the Virgin Islands, that deals from Virgin Island businesses. They also put in filters in there sometimes. So, for instance, if you leave one of our questions blank, that will oftentimes trigger a filter to be kicked in, and that means that lender will not even see your request for funding. So make sure you answer all the questions. There still may be many lenders that are filtered out because if you are, some say, I don't want to look at any prospective deals if the business has not been in business for more than 3 years, and some other filters that they may have in there. So make sure you fill them all out. Once it gets distributed to lenders, they see it, and then they can connect with you to say, okay, we're interested, and we just make the connection there for you. But this goes out to our lender database, numbers in the thousands. While there are 5 lenders physically located in the Virgin Islands, there are many thousands others across the country, some of whom are interested in deals in the Virgin Islands. In fact, right now, I would say 60% of the SBA guaranteed loans in the territory are coming from outside lenders. So you would click this, you would just simply click find lenders, and it will take you to a site where you will start the process. As you see, what's the name of your business, where are you located, and hit continue. So very simple thing to do. So what's the advantage of a government guaranteed loan? The big advantage to lenders is, of course, is we reduce the risk. It's less risky for them because our guarantee allows them to do a deal, and if it does go bad, we will provide that percentage guarantee to them. Now, they're still in the what we call a first lien position, or we're in a first lien position, which means that they are on the hook. So let's say we are guaranteeing a loan for 80%. They're still on the hook for their 20% all the way down to the end. But we will get them through that process. It's still a significant advantage for them to reduce that risk in a loan. For you, it helps you obtain a loan possibly without as much of a large down payment, or maybe you don't have or need to have as much collateral on hand. You can be assured that the interest rates are going to be reasonable and of longer terms. Now, interest rates are still pretty high across the board. Even at SBA, our minimum loan rates are tied to the federal funds rate. And there is a percentage that we allow lenders to charge above that. So right now in today's lending market, you're still looking at, for a typical 7A loan, it could be around 10% or more. We also have a lender loan program called 504, which is structured a little bit differently, primarily for buildings and land that loan interest rate can come down a little bit and the terms a little bit longer. But the lender will know which product of ours makes the most sense. They want to get you the best rate possible as well, because they just want to make sure the loan gets done and they can secure their guarantee. And then having a SBA loan also prevents some other predatory lending practices that can happen out there. Demand clauses or balloon payments at the end, those are not allowed in an SBA loan. So you can be assured that if a lender is using the SBA guarantee, they're using reasonable terms on those, and they have some oversight from a federal agency on that. You can use an SBA backed loan to do just about anything for your business. So you can use it to have a startup or to launch your business in some way. Now, it's still up to the lender to decide if they want to use that guarantee for that, but you certainly can. That certainly can be used to do that. You can use it to purchase a small business or access revolving credit, or purchase or expand your facilities or inventory, or purchase land, or export a product. In fact, our highest guarantee is provided to deals where a borrower is seeking to export their product overseas. So it can be used for all sorts of things. There are some limited things where it cannot be used for. And of course, if you imagine, we're using federal dollars to back these loans, and these are public funds. So we must make sure that they are used in a way that is reasonable use of public funds. So of course, no loan going to a business that engages in an illegal activity, that can't happen. And it can't be used for things that are speculative or investment in nature. Where these things come up most frequently in the Virgin Islands, of course, if anyone is seeking a loan for an industry connected with marijuana, that may be legal in some states and to some aspect in the territory. but it is not legal federally. And so therefore, if you're seeking an SBA guarantee on that loan, you can't get the guarantee. That is not to say that you can't get a loan for your business for that. It just can't come with an SBA guarantee to help. Another one that comes up frequently are people who are interested in buying local homes in the islands and then renting them out through Airbnbs or VRBO or something like that. These are considered investment properties. SBA has a requirement that for any business, you must occupy and be operating your business out of at least 51% of the property. If you're getting a loan for a property in a building, then you must be operating your business out of there at least 51% of the space, and not be just leasing it out to others. Otherwise, that's considered speculative. But just about any, and again, you can still get loans on those types of transactions. It's just there are some restrictions on the SBA guarantee for that. As I mentioned, all of these banks, and including the Virgin Islands Economic Development Authority, they can use an SBA guarantee to help get a deal done. Strongly, again, encourage you to start with one of the local banks, one that you have an existing relationship, but you can also talk to them all at the same time as well. They are all able to do loans. This is Lender Match. I know I mentioned this already on that. Essentially, you just describe your needs. You get a response typically within 2 days, and then they will help you with that process to go through it. But it's a very, very helpful, excellent tool that multiple businesses in the territory have used to secure loans. So I want to talk a little bit about what you need as you're going into the process of securing a loan. The most frequent reason that I hear from Virgin Island lenders as to why they are unable to get to a yes on a loan is because the borrower does not have sufficient financial statements. There may have been a time years ago where borrowers knew the local lender, and deals may have been done on a handshake, but that time is long, long gone. Lenders have a lot of oversight, have a lot of requirements, federal requirements, local requirements that they must abide by, and they cannot just provide you a loan without proper statements and financial data to back that up and back up that decision. The 3 primary statements you're going to need is a balance sheet, which is simply a snapshot of your assets and any claims on your assets that show what you own, what you owe, and how it's financed. That's an important thing to know for a business. It gives them a snapshot of what you look like, what your financial picture looks like. It's essentially a list of your assets and your liabilities and shows them what's going on. Your income statement shows your revenue and expenses and provides a bottom line of profitability over a specified period of time. Very important for a lender. They arrive at ratios depending that show what your revenue looks like over time, how much you're bringing in a year, how much debt you have, and they plug those into different formulas they have on particular industries to help them get to a decision on that. These are really important. And then finally, your cash flow statement shows the sources of your capital and the uses of your cash flow, as well as the net change on cash over a specified period. That helps them understand what the cycle of revenue looks like for your business and helps them identify troublesome areas that they want to ask you about. But it helps to give them a better understanding of your ability at the end. It just comes down to your ability to, and the capacity to repay your loan. And these financial statements are what they're going to need to see. Also, your credit score is incredibly important. There are, as you may be aware, 3 large credit reporting agencies, Equifax, Experian, TransUnion, who combine to put together your score. They each have a different scoring system, but they're generally in the same range. You should know your credit score before you at all consider talking to a lender. You can get it free from a bunch of different areas. There's an annualcreditreport.com. You can also go to our federal sites. The Consumer Financial Protection Bureau, Federal Trade Commission, USA.gov has links and resources to help you learn more about the credit reports and their scores. You can purchase a copy of your credit report at myfico.com. There's lots of ways to get your credit report. that is something you should get early on in the process. And again, before you even think about talking to a lender, make sure you know your credit score. And if you need to get the score up, there are ways to help get that up. And you can work with our small business development centers to talk through those things. There are also other agencies out there. But you should have that score in place and be able to have answers for any question a prospective borrower may have about your credit score or your credit report. So as you go through this process, as you're pulling together your financial statements, another piece of that, as I mentioned, the sea of conditions, is your business plan. These are all documents that your SBA resource partner can help out with. Here in the territory, we have 3 resource partners that are operating. Of course, here in this presentation is being hosted by our Small Business Development Center. They're the primary resource in the territory. We also have SCORE, which is a volunteer organization. They are our SCORE chapter in the Virgin Islands is affiliated with SCORE of Broward County, which has many SCORE mentors. They're essentially a coaching and mentoring organization. You can be matched with a SCORE mentor who understands your industry, may have many years of expertise in your industry, who can help you sort through a lot of things and help you, of course, as you're seeking a loan. A lot of them have a great deal of expertise in the financial services industry and can help you out free of charge. They also have a lot of great templates on their site. If you're putting together your financial statements or your business plan for the first time, they have a lot of great templates that can help you with that, many of which are geared towards or tailored towards specific industries. And if you're a veteran, we also have a Veteran Business Outreach Center that is based in Puerto Rico, but they come to the territory fairly regularly to provide training and resources. In fact, there's a presentation going on St. Croix today by the Veterans Business Outreach Center to help small business owners there think through the process of starting and growing a successful business in a territory. The Small Business Development Center, though, as I mentioned, is the largest. It has offices on all 3 islands. They can do lots of things. They help you assess the health and feasibility of your business. Feasibility is important. I used to tell many of our business advisors many years ago is that one of the primary functions that they will do is to talk people out of a bad idea before they get too far down the road. Many people oftentimes will be very fired up about a business plan and an idea and talk to friends and family, and they want to be supportive and tell you, yes, go for it. But it requires oftentimes dipping into your savings, running up credit cards. It's a huge financial decision. And the role of the SBDC advisor is to give you objective feedback to help you consider whether it is truly feasible and makes sense to go forward. They can help you with the development of a sound business plan. Now, they're not going to write that plan for you, but they will provide you the tools and the expertise to review that plan and provide you advice and direction and feedback, and they will help massage that with you as you go along and develop that. A lot of great resources there. They can provide you market and industry research. They have a lot of great tools that normally people have to pay a lot of money for to get that industry research, and they can provide that free of charge. They'll review your financial statements. They can help you prepare that loan application and introduce you to lenders. They are well connected with all the lenders in the territory and even some lenders outside the territory. They know what they're looking for, and they know how to present your loan application in a favorable light to those lenders. They can help you connect with government agencies if you're interested in government contracting or other experts. And they can just overall help you develop that expertise in business management. I have owned businesses myself in the past. I have been the director of an SBDC in the past. I've been with SBA for over 10 years now. If I was starting a business today, I would still make an appointment with the Small Business Development Center and sit down and talk with them just to get another pair of eyes that are on my business plan and gather their feedback and advice. A lot of people think, they know their industry really well and they don't need the advice or help of a Small Business Development Center. I understand, but it is still an excellent tool that you would be foolish to not take advantage of. But all of you are here today in the program that is being hosted by the SBDC, so I know you understand all that. Finally, I'll leave you with just some links. There is a great Learning Center dashboard on SBA site. You can, a link for it is there. If you just went to sba.gov, we have a lot of great tools on our site anyway, but there's also a link for what we call a Learning Center. There are a lot of pre-recorded presentations, much like this one, on access to capital, on government contracting, on building your business plan, on marketing your business effectively. Lots of great things available on there. We also have a lot of information where we explain our different programs. If you want to do a deeper dive on how the government guaranteed lending works or federal contracting works or on some of our other resources, it's all there on our site. And then this is my email. I primarily recommend if you're trying to get in touch with me to use my email. There's my phone number as well, but the email is really the best way to get in touch with me. I'm not always able to answer the phone, just like right now I'm in a presentation. I can't answer the phone calls coming into the office, but I can receive your email pretty quickly. I can also helps me to direct you to an area for assistance, whether that is back to a local resource partner, or if we're talking about one of something related to SBA, whether it's an old disaster loan you may have or a federal contracting issue, I can loop in other people to assist with that. So please email me anytime you have a question or issue. All right, so that's it for my presentation. I'll stop sharing my screen now and open it up to any questions anyone has. I believe you can either unmute or request to be unmuted or put a question in chat if you have one.
Good afternoon. How are you today?
Good. How about you?
Great, thank you. Great presentation. I do have a few questions for you.
Sure.
Which banks do you see our lenders are most? I know you showed the top 5 lenders in the Virgin Islands, but which ones do you see doing the most SBA loans, and why do you think that is?
We just recognized some top lenders in the Virgin Islands. The one that did the most loans or utilized SBA's guarantee the most this past year was Merchants Bank on St. Thomas. And
Okay.
they can do loans on St. Croix and St. John as well. Popular has been a very frequent user of our guarantee, and so has Oriental. Those 3 have been the most frequent or the most recent winners of our Top Lenders of the Year award. Oriental, First Bank will still do them and others, but those 3 have been the most frequent. Again, though, I would recommend using one where you may have an existing relationship. And that doesn't necessarily mean, even though a lender is not utilizing our guarantee, it doesn't mean they're not doing loans frequently, but it is a good indicator of lenders who are trying to leverage every tool in their toolbox to get a loan done. It's a good indicator of who's the most aggressive about trying to get a loan done for a borrower. So right now, Merchants Bank did the most, followed closely by Popular and then Oriental locally.
Okay, very helpful. Thank you.
Sure.
Oh, I'm sorry. And my other question was, I know you mentioned 10% for most loans, but what is the going rate for the 504 loans that you're seeing right now?
Interest rate on those loans?
For 504.
It is hovering around 6%. I think it might be just under. That changes pretty frequently, but looking at it just 2 weeks ago, it was either in a high 5s or low 6s as far as a percentage rate. And again, these rates will vary depending on how much you're taking out there. They're not a set rate for every 504 deal or every 7A deal. A lot depends on how much you're taking out and what it's for. But generally, they're going to fall around that 6% range.
Okay.
Right now anyway.
Very helpful. Thank you.
And if as things change over time, those rates change, you can keep track of it. You can look online, but just to tell you briefly, our loan is tied to the Wall Street Journal prime rate. And then there is a percentage above that Wall Street Journal prime rate, depending on the type of loan that lenders can charge. But as that Wall Street Journal prime rate goes down, the SBA rates go down on all our loans.
Got it. And one more question:
Sure.
if you have an existing building and you're trying to refinance it, and it is being used for commercial purposes, like several businesses within the building, how long do they usually expect leases to be in effect in that building?
Um, I think that it depends. They just want to see what the amount of space is leased and what those terms are. I think
Okay.
that varies from borrower. Um, I mean, from lender on what exactly how long those terms need to be. Now, if you're referring to a space that is a building that is primarily rented out to other businesses, they would consider that speculative and therefore would not be eligible for SBA's guarantee. Again, that doesn't mean that you can't get a loan. It just means you can't get an SBA guarantee for it. They want to see that the business that is securing the loan, if it's
Mm-hmm.
for a building, that business is operating out of that building, at least 51% of the square footage of that building.
51%. And are restaurants gonna get considered speculative?
Now, they're not considered speculative as far as SBA is concerned and
Mhm.
their ability to use our guarantee. However, each industry has a varying degree of risk to it,
Right.
and restaurants are very risky for lenders. So even with our guarantee, there have been cases where I've seen a lender will say, "We're just not going to lend to a restaurant, period. They don't care
Yeah.
about anything else. They're just not going to do it." But that's not to say, they won't, and they're certainly eligible for a guarantee. And there have been restaurants here in the territory that have been funded through SBA's guarantee, but just know ahead of time that lenders do look at that as a little bit more risky because they do have a high failure rate.
Got it. Okay. Thank you.
Sure.
Thank you so much for that, Wayne.
No problem.
I have a few persons in session. I can't see your actual name. Can you edit your Zoom name so I can make sure that you're on a recipient list to receive the post survey email that includes a PowerPoint presentation for today? And in the interim, I'd like to highlight a few upcoming trainings. But first, the VI SBDC has so much more in store for the USVI small business community. You can visit our website at www.visbdc.org. Download the VI SBDC app on your mobile device from the appropriate app store. Like and follow us on Facebook, Instagram, Twitter, Google Business, and subscribe to the VI SBDC YouTube channel for new uploads of our on-demand webinars. Here's a preview of upcoming trainings. Tomorrow we have First Bank presenting The Power of Business Credit, How to Grow Your Company. On May 22nd, we have VI Apex presenting Leveraging Your Capability Statement. This Friday, we have our state director presenting the business development series, Weathering the Storm, a business continuity framework. On the 29th, we have the business plan canvas, Designing Your Entrepreneurial Journey. On the 30th, we have Safety in Paradise, and they'll be presenting safety and health practices for USVI businesses. In June, on the 3rd, we have SBA back with SBA resources every small business should know. On June 4th, we have VBAC, an introduction to business ownership. On June 11th, we have VBAC back again presenting on understanding markets and competitive space. On the 12th, we have VI Apex presenting on how to become a federal subcontractor. And on June 13th, we have Pivoting for Growth, turning challenges into opportunities. Okay, so I do see a question in the chat. Someone is asking, can you expound on the role of the EDA with SBDC programs?
Sure. The Virgin Islands Economic Development Authority is what we call an approved user of the guarantee. SBA's relationship with VIEDA is really twofold. One is we provide that guarantee. If they wish to use it to make a loan, they can. They are not frequent users of the guarantee. They also have another program called SSBCI, where they are using that to help guarantee loans, but they can. and they have done it in the past. They did it during COVID when we had some COVID loans. They did some guarantees for that and utilized it, but they're eligible. So there's that. The other piece where we work with the Virgin Islands Economic Development Authority is through a program called STEP, which is the State Trade Expansion Program, whereby SBA provides a small grant funds to the Virgin Islands Economic Development Authority, and then they leverage that to help businesses who are seeking to export their product or conduct trade with other countries, maybe some other islands down island from us. They can help pay for trade shows or other activities to help a small business promote and sell their product outside the territory. Those are the two primary ways we work with the Virgin Islands Economic Development Authority. And then, of course, all our resources are available to them. So as they are looking to do a deal, maybe it's a funding deal through a loan or some other deal, they can always rely on the Small Business Development Center and our resource partners to assist.
Thank you for that. I don't see any more questions at this time, Wayne, so I guess I'll go ahead and encourage everyone to check their email, fill out that survey, let us know how we're doing. And we thank you for your time and attendance here today on behalf of the entire VISPDC network. Compliments of State Director John Morasco. Thank you, Wayne, for always collaborating with us to deliver these presentations to our USVI small business community. And enjoy the rest of your day. Thank you so much, Wayne.
Thank you.
All righty.